Hello traders, welcome to your daily market update for June the 22nd, and it's the start of another week, the last week of the month. And this week it's going to be focused on Europe. Europe is the key. It could be a make or break week. We do have an emergency summit today, so I think ultimately the market's going to be moved around on the back of the rumours coming out of that summit. We do have another summit following that on June the 25th, and I think it's going to be a make or break. One of these summits is actually going to determine what actually happens with Greece, because time is running out, and I think that if they can't do anything in these emergency meetings, then the likelihood of anything happening following that is quite slim. Personally, I think they will come up with some sort of a deal, but I wouldn't be surprised either if Greece was to be too stubborn and end up being ejected from the Eurozone. Or really, they've had every opportunity to stay in the Eurozone. They've just had to make some changes. So really, they've just decided to non-comply, and they'd rather be out than in. There's still a lot of optimism around a deal being done. So that's what's holding the euro up. The ECB on Friday did announce that they're going to extend the ELA program to the end of the month. So that's where they will continue to remain solvent until the end of the month, and giving to the end of these two summits that I've just mentioned, and that's where things will come to a head. And later on, we don't have a lot of data for the rest of the week for not a lot of data for Europe that's going to potentially overshadow the Greek situation. So there's not a lot to talk about. The data that we will get should be of importance after the end of this month. It will be painting a picture of the economy once the Greek situation settles. Maybe the market will move back to data-dependent moves. The data to date has been quite good. We're seeing that the ECB program is actually working. We are getting improvements in some areas, so at least things are stabilising, and really some things are on the improve. So that's what we'll be looking at with the euro. The Bank of Japan rates remained unchanged last week. No surprise there. So that's going to keep the yen quite subdued really now for the rest of the week. There's going to be no talks that we're really going to be focusing on unless Kuroda comes out with some more commentary on things like that. We do have the Bank of Japan's monthly report. And other than that, I don't even expect that to come out with anything of great surprise. So the Eurogroup meeting today, regarding the US dollar, we only have home sales this afternoon or in today's session. That could actually tick up and provide a little bit of support for the US dollar, but we'll have to wait and see. It's just be a short-term bounce. If that was the case, it's not any data that's going to create a full-on correction, but it could actually support it. We also have later on this week, we have Q1 GDP. That's the major data coming out for the US dollar this week. Other than that, it's all going to be focused on the euro. The Canadian dollar sold off quite heavily on Friday, and that was due to the really weak retail sales figures. So we did see a bit of a bounce in the US dollar versus the Canadian dollar, and if we do see a little bit more support for the US dollar as a result of the home sales, we could see a little bit of a bounce in the US dollar versus the Canadian. The pound has now created or matched the previous record of 10 straight days with no correction. The previous time that it done that was 2012, April, and it actually initiated a large sell-off in the pound back then when that happened. But we'll wait and see what happens. There is no data coming out for the pound this afternoon. You can see on the calendar in front there. We don't have a lot of information, so it's all going to be down to risk appetite, and that drives the flows in and out of the pound. We could actually see a consolidation at this point. It's also going to come down to whether people think that the contagion from the Eurozone is going to flow over into the pound and pull it down a little bit. We'll have to wait and see there, but there's no major data. Let's go and have a look at some charts. And we are looking at the US dollar index, and you can see here it is coming down to finding a little bit of pressure. We have sold off a little bit. We tried to hold up and bounce off some support here on Friday. We still haven't broken through the previous lows, and we'll wait and see if we can hold up here. And if the market can hold up, and we might be able to move back up into the upper realms of the channel. But like I said, there's no major data this week, so I don't expect a huge reversal in the US dollar. It will just be more a risk appetite trade of risk on, risk off, so to speak. we go and have a look at the charts, you can see the New Zealand dollar has been sold off heavily, still from last week. There has been no change in their circumstance. They did cut interest rates. They did say they can further cut interest rates, and they did have some weak data coming out last week. So there's continuing pressure on the New Zealand dollar, and if we did actually end up getting a bounce, it would just be a good opportunity to get in and continue to sell if you haven't already. But for now, I believe that the flows are going to continue to the downside. The Australian dollar is stuck within this consolidation that I keep mentioning. It hasn't broken out of it at 78.5 cents, 75.5 cents is the support, and I don't see that there's going to be a major shift in that today. So we will be range bound, and keep that in mind if you are trading. I'm actually thinking about putting an article together on long-term trend trading right now is broken. It's not working, and there's good reason for it, but it doesn't mean it's broken forever. So stay tuned for that. In terms of the euro, you can see here that we have had a bit of a bounce. We haven't taken out 114.3, but if we were to do so, that is a resistance level between 114.3 and 114.5. That you can see the previous highs over here. That if we did get a break above, it could actually move back up and start running towards the 120. In actual fact, we do have a head and shoulders pattern with the head being here and the right shoulder here, left shoulder there. If I actually draw a line from shoulder to shoulder, you can see it a bit clearer. And a break above the $14.650, somewhere around that, would actually create a move. And I wouldn't be surprised if we did come up and move up into this resistance zone before we had the next direction. But that's going to be subject to Greece. If Greece does do a deal, we could get a bit of a relief rally. We'll have to wait and see what happens on the market. And how the market interprets any further moves. As you can see, the Great British Pound, we have taken out the previous highs. We have had 10 straight days without a major correction, and we could actually get that at some point in the future, but for now the flows are to the upside, and there's nothing that can upset the pound in terms of data, and we don't have anything major coming out for the US besides home sales. Home sales could come out really well, and we could see the pound come off a little bit and finish in negative territory. But we'll have to wait and see if that was to flow through and actually break through this previous resistance level that would now become short-term support if it was just a short-term tick up in US data that created a very small pullback before the pound continued high. But right now, you can't argue with the strength of the momentum, and it is a bullish market for the pound. However, because of the large run that we've had without a pullback, I wouldn't be looking to get in long for any longer trend trades, that's for sure. I'd be looking for some shorter term scalping opportunities, or if we were to get a reversal, I'd probably play that in the short term. US dollar versus the Canadian dollar, we did get the big bounce here, and the market has followed through. On the back of the weak Canadian retail sales, we are somewhat stuck in this little range-bound consolidation where the market had a really nice bounce on US dollar strength. We have come off since then. And whether we get a bounce and continue to move higher is going to be subject to the weakness in the flows out of Canada, and if we are going to see the US dollar strength come back in. Tonight's retail sales might be able to push prices back up towards the previous major resistance level of 123.5 to 124, where historically that was major support. It's now become major resistance. You can see that we've become support over here, become resistance here. It is a very key level that the market is focusing on, so we have to respect that. US dollar versus the Japanese yen, if I go to a daily chart, you can see that we have been under pressure, and it's trying to hold up at 122.5, but if we did get a breakdown of 122.5, it looks like it will make a run to 122. It's just going to come down to support and whether it actually holds up, but it's trying real hard, but it doesn't look real promising from the candle patterns and formations. And we could see some lower prices. As I've mentioned before, I think any lower prices that we can get from 122 or below would actually be pretty good buying for a longer term outlook. Well, that's it from me today. Good luck trading. We don't have a lot of data. Keep an eye on the technicals. And as I mentioned, trend trading for the ultra long term is really not the play right now. So keep an eye on your short term opportunities. I'll be back again tomorrow. So until then, trade well.